Latanya Lotz, and I am your host. Tonight's webinar is over. Topic is 101 Credit Basics and Influencing Factors. So, understanding credit is very important when you're representing a buyer. Why would a buyer need credit? That is a good question. A buyer needs credit in order to obtain a loan to purchase a home. So, when consulting with a buyer, one of the main questions that is asked is, how is your credit? Basically, credit is nothing more than just borrowing money on a promise that you will pay it back within a time frame. And some loans that you obtain has interest bearing to it. So therefore, not only are you promising to pay the money back that you're borrowing for your purchase, but you're also willing to pay a little additional on the top of that, which is generally called interest. A buyer needs credit to qualify for financing unless they're paying cash. So there's nothing like a cash buyer. And in this economy, there are so many investors now that are purchasing property for cash. And of course, if you're purchasing your property cash, then your credit is not a factor, and we're not looking to see if you're credit worthy in order to obtain a loan. But unfortunately, if you're not paying cash, then you have to be credit worthy. A borrower will complete a credit application with a bank or a lender, which will determine their credit worthiness. Why is your credit important? Well, as I stated, in order to purchase a home, you have to be credit worthiness, and in order to determine that, a lender or a bank institution will look at your credit report. When buying a home, a credit report is a collection. When buying a home, so that you know what a credit report is, a credit report is a collection of consumer information that includes personal information, credit activity, financial information, public records, and inquiries. A credit report allows a creditor to make a decision about your credit worthiness. So, what a creditor is doing once they review your credit report, they're looking at your history. What type of accounts do you have open? How do you pay those accounts that you have open? How many inquiries do you have? Or are you just applying for a lot of stuff and what's going on? So it gives them a full picture of what they need to know about how you maintain your account. There are 3 commonly used credit bureaus that a credit report can be retrieved from: Experian, TransUnion, and Equifax. Each bureau does not necessarily report the same information. So if you ever reviewed your own personal credit report or reviewed a client's credit report, you would notice that the information is not the same according to each report. And that's because creditors report differently. One creditor may report to TransUnion and not report to Equifax and Experian, or vice versa. A creditor may report to 2 of the 3 bureaus and not the other, which you will see that the information is different, and that's the reason why. Does a buyer need a certain credit score to buy a home? Absolutely. So in order to purchase a home, you have to have a qualifying credit score. And a credit score is basically a numeric summarization of a consumer credit report. It is a 3-digit number that determines your credit worthiness. So that score can determine if you will be able to purchase a home or not. Most lenders require a 640 credit score, but there are some loan programs that will accept a 580. Most down payment assistance programs require a minimum of a 620 credit score. So if you're working with a buyer and they say, oh, I have a 700 credit score, you know, okay, well then more than likely they're able to qualify for a loan based on their score. If you have a client that said, well, my credit score is not so good, it's about a 500, then you know more than likely that buyer will need some credit restoration or some type of increase in their score in order for them to qualify for a loan. Or there are some lenders that may can go that low, but they're going to need a substantial amount of money down, anywhere between 20 to 30% down, possibly even more. Just depends on what the qualification and requirements are. If you have a client that says, I need credit, I need down payment assistance, but my score is a 590, then once again, you know that you're going to have to get their score up, or, you know, advise them, assist them, refer them some type of way to get their score up so that they will be able to qualify not only for the loan, but down payment assistance as well. As you know, the higher the score, the better the chance of being approved for a loan with a lower interest rate. So your score is also a factor on the interest rate, because someone with a low credit score, more than likely their interest rate is going to be higher on a loan. Someone with a high credit score, they're going to have a better interest rate, which will make the home more affordable, or they can purchase a home a little more pricey than even what they were expecting to, because of the low interest rate would allow them to afford more. So what are the ranges of credit scores? A credit score ranges from 300 to 850. Scores can be retrieved from the same three commonly used bureaus: Equifax, Experian, and TransUnion, which are the same bureaus that provide your credit reports. And as your information on your credit report fluctuates, so does the score, because once again, the information is not always the same reportedly to each bureau. So what is the importance of having credit? Who even looks at your credit? I'll tell you, anyone that you provide your social security number to, they're the ones that's looking at your credit. They're pulling your credit report to even see if you're worthy of what they're offering you or what you're trying to obtain. So banks are looking at your credit, lenders are looking at your credit, insurance companies are looking at your credit card companies, even your employer. There are certain employers that require a certain credit history, credit score before they would even extend employment to you. Your cell phone company looks at your credit. Even landlords look at your credit, as well as utility companies. So it's very important to maintain a healthy credit so that you will be able to show that you're credit worthy and obtain the things that you're looking for, especially if you're looking to purchase a home. What does credit determine? Credit will determine your worthiness to pay a debt and how responsible you are. For home buyers, credit determines if the buyer will be approved or denied for a home loan. Credit determines interest rates for renters. Credit determines interest rates when purchasing a home. It also, for renters, determine if you will be approved or denied. Your application is also based on your credit score when applying for a rental property. So it can determine if you will be approved, denied, or in some cases, having to pay an additional deposit depending on your score. So some landlords will say, okay, their score is not where it should be, it's less than perfect, but I will allow them the opportunity to rent my home if they are willing to pay a double deposit. So a home that may be $2,500, so you're looking at $2,500 for the first month rent. You're looking at $2,500 for the deposit, plus an additional $2,500 for a deposit. So if you add that up, that's going to be quite pricey to rent a home. And that's due to not having the credit that you should have and being credit worthy. So when purchasing a home, the lender is not only looking at your credit score, they're also looking at your debt. So debt is a big part. It's the other half to being qualified for a home loan. So you may have a client that say, oh, my credit is good. I'm a 750. I have excellent credit. I pay everything on time. I have no collections, you know, et cetera, et cetera. They're praising themselves of how they've maintained such good credit. But at the same time, they are carrying a lot of debt. So although they may have good credit, their debt could be the disqualifying factor for them obtaining a loan to purchase a home. So most lenders are looking for you to be in a certain ratio. For conventional, about 43%, FHA, about 50%. Of course, there are some lenders that can go a little higher, just depending on what the requirements are. But in order to know what your client debt to income ratio is, you can give them a little homework assignment upon your consultation to let them know, okay, so the lender is going to be looking at your credit. They're also going to be looking at your debt. How much debt do you carry? And so you're going to ask them to take a look at all of their open accounts that they're paying monthly. So you want to get the monthly payment for each installment and revolving account. So keep in mind to let them know they're not calculating utilities and rent, things of that nature. They're looking for, they're calculating installment accounts. An installment account is an account that has an end date to it. So an example, an auto loan that has an end date to it. After the 60-month payment, then the loan is paid off. A mortgage account has an installment on it. If it's a 30-year mortgage after 365 payments, then that account is paid off. A revolving account, a revolving credit is credit cards. So it keeps revolving. It doesn't have an end date. So those are the accounts that we're looking at. We want them to add up installment accounts and revolving account monthly payments, and then divide it by their income. And that will let them know what their DTI is. Because once they do that homework and someone will tell you, "Ooh, mine came back to 60%, then more than likely it's going to be an issue with their debt and they're going to need to reduce some debt. Well, when the borrower asks you, well, how do I qualify for a home loan? You will say, apply with the bank or with the lender. If you're a realtor, it's good to have preferred lenders that you trust and you work with on a regular basis, so that you can kind of know what the requirements are, how they work, and knowing the steps of the process of the loan. So of course, if they're purchasing a new construction home, the builder will require the buyer to utilize their lender. They will want you to apply with their lender in order to get incentives. So just depending on if it's a resale or new construction, or how you will advise them of getting approved for a loan. So the first thing that they need to do once they're working with a lender is complete an application. The application will allow the lender to do a credit check. And what the lender will be looking for is obtaining their credit history as well as the credit score. The score that a lender go off of is the middle score. So whatever score is in the middle, that is the score that you'll be qualified for. So if your TransUnion is a 700, your Experian is a 650, and Equifax is a 605, they're going to go with the 650 score that Experian is given, because that's the score that's in the middle. After reviewing the buyer's credit report and retrieving the credit score, at this point, a pre-qualification letter can be drafted if the information meet qualifications. Now, me as a realtor, and I'm representing my seller, I will prefer the buyer to provide a pre-approved letter, because a pre-approved letter means that the lender went a little further than just looking at credit. They're also looking at their income. They're looking at their assets. They're kind of actually getting all the necessary documents that's needed to give a better answer. So a pre-approval letter is a little better in my opinion, and that's what I recommend when I'm representing the seller. So, but when you represent a buyer and they're pre-approved and they have that letter in hand, it's the most exciting time, because it's time to shop for a home. You start your house hunting process, put the offer in, and then the next step is to the closing table. So working with buyers that are credit worthy will definitely get you to the closing table and keeping your pipeline full. But if you do have clients that's not credit worthy at the time, don't just throw them away. Do not get rid of them. Keep them, because what you want to do is help improve their score. And when I say help, if you have a preferred lender, you can see if your preferred lender can do some advising on how to increase the score. Or you may partner up with a credit specialist that can restore their credit to get the score up. Because at the end of the day, at some point, they're going to be credit worthy and they're going to be ready to buy a home, and you want them to buy the home with you. Thank you all for attending. It has been awesome, and I appreciate your attention. Have a great night.